Hey guys, welcome back to another episode. This is going to be my weekly series where I take a look at 4 stocks I'm looking to buy this week. Like most of you, I put money to work every single week. So every single week, I'm either looking for a new investment to invest in or some old position to increase my overall exposure. This week, I'm going to increase my overall exposure, and the 4 companies I'm taking a quick look at today are going to be Paysafe, Draftkings, Shopify, and Spotify. We can see Paysafe is down about 63% from its all-time highs. Spotify is down about 36%. Draftkings is down about 33.4%. And Shopify is down about 16% from their all-time high. So I just want to take a quick look at these stocks. I'm going to share quick recent news for all these companies and why I am excited. If this is your first time here, guys, make sure to hit the thumbs up, make sure to hit the subscribe button, and make sure to check out the pinned comment where I have 10 free stock ideas for you. All right, so I mentioned the first one we're going to take a quick look at is Paysafe, and this is traded under the New York Stock Exchange as ticker PSFE. If you have been watching my channel and my videos of this weekly series, this is a recent contender, right? I think it's been on my list every other week for the past month or two. And the reason is, for me as an investor, I'm looking, even though I might buy it 2 weeks ago, I'm looking to increase my exposure over time. And these are some companies, the 4 that I have here, I've added numerous times in the past few months, and I still want to increase my exposure because I believe they're still not heavy enough for my portfolio. So let's take a quick look at Paysafe, all right? The reason I'm excited about Paysafe are 2 major growth performance. The first is going to be the overall payment platform in the iGamification in online casinos in sports betting market. Also in the regular gaming market. The second thing is the e-cash solutions that Paysafe has international in Europe and is growing in Latin America. So we're going to take a quick look at some recent news here. We can see on October 4th of 2021, Paysafe powers online payments for Montana's lottery sportsbook system. We can also see here on September 30th of 2021, Paysafe streamlines payments for interactive wagering with Fubo Gaming in USA. And this is expected to launch in Q4 of 2021, subjected to all those regulatory approvals. But Fubo Gaming's mobile sportsbook will plug into Paysafe. So we can see Paysafe continues to release recent news. Another thing we can see in September 15th of 2021, Paysafe kind of created a new leadership team, I want to say, and they named Zach Cutler as the CEO of North America's iGaming. This is a newly creative executive role which reports directly into the group CEO. And it's just, again, showing that huge growth in the North American iGaming vertical, which continues to show explosive growth as more and more states in the United States regulate online gambling, sports betting, and lottery. So we can see Paysafe is definitely a huge player. We can see, again, in September. So now we kind of took a look at those kind of iGamification growth. Now, in the past few months, we've also seen a nice of e-cash solution growth. For example, Bank partners with Paysafe to enable cash deposits for digital banking. App is a Dutch challenger app-based bank, and they provide customers with access to cash services. Customers who prefer to use cash in their daily lives can now use PayCash, one of Paysafe's e-cash solutions, to conveniently add cash into their Bank accounts. And this is going to be an international rollout partnership between Paysafe and Bank, which starts with 21 European countries. Not only are they expanding through Europe with they did an acquisition in Europe, I forget the actual country, but they are expanding e-cash solutions there. In Latin America, they're also doing expansion through acquisition. Paysafe completes their acquisition of Pago Efectivo to kind of get a strategic foothold in Latin America in the e-cash solution market. Recently, they also announced an acquisition of SafetyPay, which is another Latin America kind of e-cash payment solution platform as well. So we can see Paysafe is definitely in this list. It's one that I've been adding numerous times, and one I'm going to continue to add almost every other week at these prices of about $7, even $8 right now. I think there's a lot of opportunity. The second stock we're going to take a quick look at is Draftkings. Do you want 10 free stock picks right now? Well, if you do, let's take a quick listen to today's sponsor, a great reason why I'm able to provide so much content to you guys for free. I want to thank The Motley Fool for sponsoring this video. Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Stock Advisor has beat the market by more than 4x. Go to fool.com/Jose to get your free 10 stock picks now. DraftKings right now is sitting at $47.91, is down about 3% for the day, and we can see from its 52-week high, the stock is down 33.4%. And like I mentioned, I'm pretty bullish in Paysafe because of the iGamification growth, right, of payment platforms there. I'm bullish in DraftKings for that similar market, right, the iGaming market. I believe we're still in early stages, and DraftKings seems to be one of the most innovative leaders in this market. DraftKings is focusing in things like growing their sports books, their daily fantasy, their iGamification. They're even entering like the marketplace with NFTs and other forms of digital collectibles, which again, they have this kind of different aspects to grab more and more users and then be able to cross-sell to those users. So we can see on October 4th, DraftKings announces expansion with addition of second largest office in the United States at Las Vegas. Next, we can see here on September 29th of 2021, a few weeks ago, retail sports betting in Connecticut will begin on September 30th at Foxwoods Resort Casino. Players will be able to place bets at the temporary DraftKings sportsbooks at Foxwoods. And statewide, they're looking to expand. They're expected to launch early in October, pending regulatory approval. So we're seeing this kind of growth. Again, the iGamification growth continues to happen. DraftKings launches online sports betting in Arizona. This happened in September 9th of 2021. And we can see also DraftKings expanding in the iGamification. They have this online casino platform. DraftKings launches Rocket as a new and exclusive online casino game, and it marks their 37th game developed in-house for DraftKings Casino. Finally, we can see in September 1st, DraftKings launches mobile sportsbook in Wyoming ahead of NFL kickoff. This is also marking the 13th state in which its top-rated mobile sportsbook is available. So only 13 states right now have sports books in the United States. As of September 1st, I think in September 30th, we had a little bit more. By October 10th, we have a little bit more, but there's still so much growth in this market. And we can see they are also in the NFT market, which is very popular right now. They have partnered up with Autograph, which works with a lot of great athletes. And for example, NFTs are coming up for retired sprinter Usain Bolt. They have Tom Brady. They've also had Tony Hawk, numerous players and sports celebrities, I want to say, kind of create their NFTs and bring it over to DraftKings. The third stock we're going to take a quick look at is Shopify. This was down about 1.46% on the day. We can see from its 52-week high, the stock is down about 16%. So it's definitely seen quite a correction. Shopify is one of those stocks that it might not be giving me the best price action at the moment, but one, I really want to increase in my overall portfolio exposure. So one, I don't mind dollar cost averaging over time. So for those that don't know Shopify is pretty much the one-stop shop. If you are some form of online store to kind of go from everything payments, capital, marketing, analytics, apps, inventory fulfillment, order management, shipping. It's kind of way if you have one online shop, they work with other platforms and you're able to kind of cross-sell from Shopify and enter all these other platforms, all these other e-commerce with a lot more ease than doing each of them individually, and allows you to manage everything on one device, one platform, and every channel you type of need, right? And the reason I like Shopify is they continue to bring new platforms to their users. For example, here on August 24th of 2021, they partnered up with TikTok, right? One of the biggest social app right now in the world right now. So, hey, they're bringing their Shopify merchants to customers because TikTok is a place where there's a lot of eyes. Another thing we can see is Roku to roll out apps supporting Shopify merchants TV streaming advertising campaigns. So if you are, for example, a Shopify merchant, now you can kind of create some form of TV streaming advertisement on Roku's platform. Again, we're seeing strong number growth in Roku platforms, a great place where there's plenty of eyes, and something coming in right before the holidays can be really well for both Shopify and Roku. Shopify is expected to report their earnings at the end of this month, October 28th of 2021. Some investors might be super excited about that. And just to see the super growth that they saw in their last quarter, total revenue was up 57% year over year. Subscription solution revenue was up 70%. Most of the revenue comes from merchant solutions, and this was up 52% year over year. Monthly recurring revenue was up about 67% year over year, right? So Shopify, strong growth. Like I mentioned, I believe Shopify maybe not giving us the best price point, but for me, it's enough to kind of dollar cost average into a position and increase that exposure little by little every time I see a nice drop. The last stock I want to take a quick look at is Spotify. And Spotify is one that usually makes this list. I want to say it's probably been a month or two since Spotify made my list again. But I'm really liking these price points of Spotify. Sitting at $232 is down about, it was down about 0.86% on the day, and we can see from its 52-week high, the stock is down about 36%. So definitely quite a correction for this company. So why am I excited about Spotify? Spotify, I do believe the voice market, podcast, and other type of original content in the voice world is still just starting off, and there's going to be a huge market. I'm pretty sure most of you guys are most likely watching or listening to this without even watching the video, just listening to the content itself. I think voice is the future. Spotify, even though sometimes they hit and miss with new products or new innovative technologies, they're always working on attempting new things. And that's what I really enjoy about Spotify. One thing about Spotify, they are expected to report their earnings October 27th of 2021. I'm super happy we're coming back to earnings season. It gives me something to really look into. So we can also see some negativity. There are some bearish people out there on Spotify. For example, this analyst came out with a $200 price target and a sell rating. Like I said, Spotify right now, during COVID, we did see a nice boost in subscribers, which kind of accelerated that growth in my opinion. Now I believe people are worried that, hey, people now returning back to home, we're not going to see that same type of growth on this company. But we can see from its most recent earnings, Spotify grew at some pretty impressive levels, right? Revenue grew 23% year over year. Their premium subscribers, which makes most of their money, grew 20% year over year, and they reached over 165 million premium paid subscribers by the end of the quarter. That's, in my opinion, that's some strong numbers. They added about 7 million in one quarter. Again, I don't believe we're going to see that similar type of growth that we saw in COVID. I do believe the voice market is still in early stages. Now I just want to show technicals for all these companies, right? Paysafe, I want to say Paysafe right now is probably my favorites in form of price points. I do believe a good portion of the risk has been eliminated. This is a stock that has been all the way up to like $20, right now sitting at $7. This is a company I enjoy for the market. Definitely one of my favorite fintech markets right now. Draftkings right now sitting about $48. I'm really liking these price points. Definitely one of my favorite dollar cost averaging times. If anything, I would really enjoy it if it dropped to about 42. That would be a nice price time. But right now, great for dollar cost averaging. Like I mentioned, Shopify on the other hand might not be giving us the perfect price points, but I do believe this is one that I'm willing to pay a little bit of a premium in dollar cost average. Spotify is another one that has kind of really pulled down, sitting at very attractive levels, eliminating a good portion of the risk. Obviously, stock prices, volatility can continue to go down. Volatility can continue to be all crazy. So these stock prices can go even more down. But I am excited in all these markets. These are all companies I believe have a strong future. So I have no problems diamond handing them during volatile times. I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.